Okay, let's get straight to it. How are the most mind-blowing gadgets we use every day? The ones powering artificial intelligence, our super smartphones, you name it, actually built.
Well, the answer, in large part, hinges on the incredible technology of just one company, ASML.
Exactly. Welcome to the deep dive, where today we're embarking on an in-depth exploration of ASML Holding N.V.
And what's truly fascinating is that while ASML might not be, a household name like Apple or Google, it's the absolute linchpin of our entire digital world.
A linchpin, that's a good word for it.
They are the undisputed global leader in semiconductor lithography systems. Those incredibly complex machines essential for manufacturing the advanced microchips that drive, well, everything. Cutting-edge AI, high-performance computing, the mobile tech we all constantly rely on.
Couldn't live without it, really. And for this deep dive, we've pulled together a pretty comprehensive set of information, including a detailed investment analysis report that just came out today, May 17th, 2025, focusing squarely on ASML.
Right. Now, for you, our listener, the learner, our goal today is really to cut through the complexities and help you grasp the core of ASML's operations.
Yeah, we want to understand their fundamental strengths, the significant hurdles they're navigating, like those newly implemented U.S. tariffs, which we'll definitely get into, and ultimately see if this whole picture looks compelling.
We're aiming for those aha moments, without making it feel like you need a PhD in physics to follow along.
Absolutely. We've got a lot to unpack. So in the first half, we'll break down precisely what ASML does, how they've achieved such dominance in their field, and we'll take a close look at their financial health.
Then, in the second half, we'll delve into how the market perceives them, who the major owners are, and the significant risks on the horizon, including a deeper dive into those new U.S. tariffs.
Yes, definitely hitting those tariffs.
Okay.
Plus, stick around, folks, because we have a final thought at the end that might just shift your perspective on the future of technology.
And just a quick note as we get into the financials, ASML primarily reports its figures in euros. We will, of course, mention U.S. dollar amounts where relevant, especially for things like stock price and market cap.
Good point. And hey, if you're finding this level of detailed insight valuable, please make sure to hit that subscribe button. That way you won't miss our next deep dive into another critical piece of this rapidly evolving technological landscape.
Okay, let's start with the basics. Understanding the fundamental operations of ASML. At its heart, ASML is exclusively focused on one thing: designing, developing, manufacturing, marketing, and servicing advanced semiconductor lithography systems.
Now, for anyone who isn't, super deep into chip manufacturing, it's essential to understand that lithography is the critical step. It's how you create those incredibly intricate circuits on a microchip.
Exactly. Think of it as an unbelievably precise printing process, but operating at the scale of atoms.
Yeah.
It's mind-bogglingly small.
Unbelievable.
And their mission statement really reflects this role. Together with our partners, we provide leading patterning solutions that drive the advancement of microchips. Their core values challenge, collaboration, care, also kind of highlight their focus on innovation and their heavy reliance on a complex network of partners.
Okay, so leading patterning solutions. Let's break that down. What exactly are we talking about in their product portfolio?
Well, the absolute crown jewel here is their extreme ultraviolet, or EUV, lithography systems. And in this area, ASML holds a complete monopoly.
A complete monopoly. Wow, okay, that sounds incredibly significant. What makes EUV so special?
It's all about the light. What's fascinating is the incredibly short wavelength of light. It uses just 13.5 nanometers.
13.5 nanometers. That's hard to even imagine.
It really is. To give you some perspective, if a human hair is about, say, 80,000 nanometers wide, we're talking about features thousands of times smaller. And this tiny wavelength is absolutely essential for creating the extremely fine details needed for today's most advanced chips, the 7mm, 5mm, 3nm nodes, and even smaller ones coming down the line.
So the chips powering the most advanced AI, the fastest computers.
Exactly. Those are the ones. AI, high-performance computing. If you want the cutting edge, you essentially need chips made using ASML's EUV machines.
So putting it simply, progress in these critical areas would basically stall without ASML.
Pretty much, yeah. That's the level of their importance. But EUV isn't their only game. They also produced deep ultraviolet, or DUV, lithography systems.
Right, and these are more like the industry workhorses used for a broader range of chips.
Correct. DUV systems, and there are different types like RF immersion, RF dry, older KrF systems. They're still absolutely vital. EUV gets the spotlight for the absolute cutting edge. but DUV is still used for many, many layers, even to those advanced chips, and it's the go-to for less critical, more mature nodes. Think of them as the reliable backbone.
Still incredibly important, even if not as flashy as EUV.
Okay.
And what's next? I saw something about high-NA EUV.
Ah, yes. High NA, which stands for High Numerical Aperture, EUV systems. It's the next big frontier. These are designed to print even smaller features, pushing towards sub-2 nanometer nodes.
Sub 2 nanometer. Incredible. Are these out yet?
The very first of these incredibly sophisticated systems have actually just started shipping to their customers. So it's happening right now.
Wow. But it's not just about the printing machines themselves, is it? There's more to their offering.
No, absolutely not.
Mhm.
ASML also provides crucial metrology and inspection systems. Think of these as quality control, but operating at the nanoscale. They're essential for ensuring the quality of those tiny patterns being printed.
Makes sense. You need to check your work at that scale.
Precisely. And they also offer computational lithography software, which helps chip designers optimize their designs specifically for the lithography process itself. It's about making the whole system work together efficiently.
And let's not forget their installed base management, or IBM. You mentioned almost every machine they've shipped is still in use.
That's what they report, yeah. It's remarkable. And this creates incredibly strong customer stickiness, or lock-in. These complex systems need ongoing service, software updates, hardware upgrades. It all leads to a very valuable recurring revenue stream.
So they're not just selling a product, they're embedding themselves in their customers' operations for the long haul. Okay, geographically, where is most of this business happening?
In 2024, their biggest market by far was Taiwan, accounting for about 29.3% of revenue. China was close behind at 26.3%, and then South Korea at 25.2%.
So heavily concentrated in those key Asian semiconductor hubs.
Very much so. It really underscores their reliance on those regions.
Which, as you hinted, could also be a potential vulnerability, right? Especially with all the talk about geopolitical tensions and efforts to, reshore chip manufacturing elsewhere.
That's a very sharp point. Any significant shifts or disruptions in Taiwan, China, or South Korea could definitely have a noticeable impact on ASML's bottom line. It's something they and investors have to watch closely.
Okay, so we've got a clear picture of what ASML does, their products, their key markets. Now let's zoom out a bit. How does ASML fit into the wider semiconductor equipment industry?
Well, as we've established, ASML is an absolutely pivotal player. The demand for their highly specialized equipment is directly tied to the overall health and, importantly, the growth of the global semiconductor market.
And that market is generally seen as having strong long-term prospects, isn't it?
Oh, absolutely. The long-term growth drivers are incredibly powerful. Think about the continued explosion of AI, the rollout of 5G and eventually 6G, the Internet of Things connecting everything, autonomous driving needing massive processing power, high-performance computing, cloud data centers expanding.
It's a long list.
It is. All these trends demand more and more sophisticated chips. Some analysts are projecting the semiconductor market could reach a staggering $1 trillion in annual revenue by 2030.
$1 trillion, wow. Okay, and what about the specific market ASML operates in lithography equipment?
That specific segment was valued around $23 billion in 2024. Projections see it more than doubling to maybe $50 billion by 2034. That's a compound annual growth rate of over 8%.
Healthy growth.
Very healthy. And while DUV, as we discussed, is dominant by volume right now, the fastest growth is definitely in EUV. Overall spending on semiconductor manufacturing gear is expected to climb significantly, maybe hitting $130 billion by 2026. And the chip makers themselves, they're planning huge capital expenditures, think around $185 billion just in 2025 to build out capacity.
So ASML is right in the sweet spot of a rapidly expanding, critically important market. Who are the main customers driving all the spending?
Their key customers are really the giants of the semiconductor world. You're talking about the big foundries like TSMC, integrated device manufacturers, companies that design and make their own chips like Intel and Samsung, and the major memory specialists like Micron.
The big players who need the most advanced tools.
Exactly. They're the ones pushing the boundaries and needing ASML's latest and greatest technology.
Okay, this makes sense. They have the critical tech, the market's growing. Now, let's dig into that dominance. What creates their economic moat? Why can't someone else just, build their own EUV machine?
The moat, yes.
Yeah.
ASML possesses arguably one of the widest and deepest economic moats in the entire technology sector. Morningstar even rates it as wide. It really comes down to a few key things. but primarily their unparalleled technological supremacy in EUV and the incredibly high barriers to entry.
So it's not just one thing, it's a combination.
Precisely. First, that technological supremacy, specifically the EUV monopoly. As we said, they are the only supplier. These machines are indispensable for the cutting edge. That gives them enormous pricing power and makes them geopolitically vital.
A powerful position indeed. What else builds that wall?
Well, the barriers to entry are just immense. Think about the R&D intensity. ASML plowed over $4 billion into R&D in 2024 alone. That was over 15% of their sales.
4 billion euros just on R&D.
Just on R&D. The sheer scale and complexity make it virtually impossible for anyone to catch up from a standing start. Then there's their vast intellectual property portfolio, decades of accumulated patents and know-how.
And the machines themselves, they must be incredibly expensive to make and buy.
Absolutely. The capital costs and scale are staggering. A single EUV system costs upwards of $200 million. You need huge economies of scale just to produce and support these things effectively.
200 million per machine.
Per machine. And then there's customer co-investment and lock-in. Their biggest customers actually help fund the development of EUV in the early days. That creates incredibly strong partnerships and sky-high switching costs. Plus, the long-term service contracts and constant upgrades keep customers locked in.
It sounds like an incredibly sticky business model. Anything else?
Yes, the ecosystem complexity. ASML relies on this intricate global network of highly specialized suppliers. Take Carl Zeiss SMT, for example. They make the critical optics for the EUV machines. They're basically the only ones who can do it at that level. Replicating that entire supply chain, it's a monumental task.
So competitors like Nikon and Canon, they exist, but they're playing in a different league, really, focused on the older DUV tech.
Exactly. Nikon and Canon are established in lithography, but they compete mainly in older, less advanced DV segments. ASML dominates the high-end DUV market RRF immersion and has that absolute EUV monopoly. Other big equipment companies like Applied Materials or Lam Research, they focus on different steps in the chip-making process, like etching or deposition.
So those market share numbers you sometimes see, like ASML having maybe 25% or more of the total lithography market, they actually understate their control over the really advanced high-value part.
Precisely. Their control over the leading edge, the part that enables AI and HPC, is essentially 100%. And this moat isn't static. The development of high-NA EUV for sub-2 nanometer nodes, that's actively reinforcing and widening the moat. Many analysts basically see it as a lost cause for anyone trying to catch up now.
Wow. Okay, that paints a very clear picture of a dominant, well-defended business. Let's switch focus now to the people steering the ship. How does ASML's management team stack up?
Right. Management quality is crucial, especially for long-term value. ASML actually had a big leadership change recently. Christophe Fouquet took over as president and CEO in April 2024, succeeding the long-serving Peter Wenink.
Fouquet wasn't an outsider, though, was he? He's been at ASML for a while.
That's correct. He's an ASML veteran, joined back in 2008, held key roles in both EUV and DUV, been on the board since 2018. He has a strong physics background, too, so you'd expect a good degree of strategic continuity.
But he's taking over at a tricky time, right? Geopolitics, the high-NA ramp-up.
Exactly. His leadership will be really tested navigating these current complexities. He's expressed confidence in AI driving growth and is focused on maturing high-NA while boosting EUV throughput. But he's also acknowledged the tariff uncertainties.
And he's been vocal about the business climate in the Netherlands. Project Beethoven, I think it was called.
Yes, he has. He's raised concerns, suggesting it could hinder their expansion plans, and called for more support for tech leaders in Europe. It's an interesting dynamic. Alongside him, you have Roger Dassen, the EVP and CFO since 2018. He came from Deloitte, brings strong financial chops.
And he's been quite direct about the potential tariff impact.
Very direct. Stated their intention is to pass on a significant part of those costs. So you have a mix of ASML veterans and external experience. Overall, it looks like a capable team.
Okay, and how do they handle capital allocation using all that money they make? Morningstar gave them a top rating here, right?
They did. Exemplary. And you can see why. That huge R&D investment is fundamental, as we discussed. They also spend significantly on capital expenditures, CapEx, to expand their own manufacturing capacity.
And returning cash to shareholders, buybacks, dividends.
Absolutely. They have a big 12 billion share repurchase program running. They bought back 2.7 billion worth in just Q1 of 2025. That signals confidence. Plus, they have a solid history of growing dividends. The proposed dividend for 2024 was up nearly 5%. The yield isn't super high, but the growth and sustainability look good.
So, a balanced approach, reinvesting heavily but also rewarding shareholders. Have they made significant acquisitions?
Yes, but very strategically focused. Buying Cymer back in 2013 brought the critical EUV light source technology in-house. Acquiring Berliner Glas Group in 2020 boosted their optics capabilities. It's all about vertical integration and strengthening that moat, and they keep a healthy cash pile, given the flexibility.
What about those Project Beethoven comments from the CEO? Is that a concern for investors?
It's something to watch. It's normal for CEOs to lobby for favorable conditions, but you'd want to monitor if those concerns start unduly influencing where they invest capital, or if it suggests they feel overly reliant on government support despite their market power. It's a nuance.
Okay, let's touch on corporate governance and ethics. How is the company structured?
They use a two-tier board system. Management board runs the company, supervisory board oversees them. That's common in the Netherlands. They're accountable to shareholders via the annual general meeting, follow Dutch, EU, and U.S. regulations like Sarbanes-Oxley because of their NASDAQ listing. Policies are in place for board pay, shareholder rights, and they have a code of conduct and ethics program.
Sounds standard, but have there been any issues or areas of scrutiny?
There have been some things. Reports of intellectual property theft, some allegedly linked to China. That's an ongoing risk with tech that's valuable. They've also had to navigate complex export controls, especially regarding China, often influenced by U.S. pressure.
Right, the geopolitics again.
Exactly. There was even a Dutch ruling allowing them to reject job applicants from U.S.-sanctioned countries due to those U.S. rules applying extraterritorially. It's a tricky tightrope. Yeah. And the Project Beethoven debate also touches on ethics. Is it legitimate advocacy or leveraging a monopoly?
And Fouquet stepping in as CEO right in the middle of all this.
Precisely. His background is solid, but navigating these external pressures effectively is going to be key for ASML's success moving forward.
All right, let's dive into the numbers, the financial health. How does ASML look on paper?
Overall, very, very strong. Their profitability and returns track record is impressive. Revenue in 2024 topped $28 billion, and their guidance for 2025 suggests further growth, maybe $30, $35 billion. Net income is robust, EPS is healthy and growing.
And those margins we talked about reflecting their pricing power.
Absolutely. Gross margin was over 51% in 2024 and actually hit 54% in Q1 2025, beating guidance thanks to a good product mix. They are guiding a bit lower for Q2, though, citing that tariff uncertainty. Operating and net profit margins are also very strong.
And how effectively do they use their capital? ROE, ROIC?
Exceptionally well. Returns on equity and invested capital are very high, indicating they're extremely efficient at generating profits from the capital invested in the business. It's a hallmark of a company with a strong competitive advantage.
Okay, strong profitability. What about the balance sheet? Stability, debt?
Also looks excellent. As of the end Q1 2025, they had substantial assets relative to liabilities, giving them a healthy equity base. Debt levels are quite low. Their debt-to-equity ratio is very comfortable, indicating low leverage.
And their cash position?
Still very strong. Over $9 billion in cash and equivalent at the end of Q1. It was down a bit from the end of 2024, but that was largely due to those share buybacks and dividend payments we mentioned.
I did notice their liquidity ratios, current ratio looked a bit lower than some peers like Applied Materials or Lam Research. Is that a worry?
It's something to be aware of. Their quick ratio is around 0.8, current ratio around 1.5. Historically, the quick ratio averaged closer to 1.0. It might just reflect their business model. These high-value, long lead-time systems mean lots of capital tied up in R&D and work-in-progress inventory. Given their overall financial strength and cash pile, it's likely manageable, but yeah, it's a metric to monitor.
Okay. And free cash flow. You mentioned something unusual in Q1.
That's right. After a very strong SCF year in 2024, Q1 2025 actually saw a negative free cash flow. Management pinned it on the timing of customer payments, down payment dynamics, and fixed asset investments.
So potentially just a temporary blip.
That's the hope. You need to watch if it's temporary or a sign of a trend. The fact they have a dedicated capital efficiency department suggests they're focused on managing cash flow well, but definitely something to track in the next quarterly report.
Got it. Finally, on the financials, let's talk valuation ratios. How does the market value ASML stock right now? It seems pricey compared to peers.
It definitely trades at a premium. If you look at ratios like price to earnings, PE, price to sales, PS, price to book, PB, they're noticeably higher than for AMIT or Lam Research.
Why the premium?
It really reflects the market, recognizing that incredibly strong moat, their leadership position, and the significant future growth expected, especially with AI driving demand. The premium multiples signal high expectations.
So is it too expensive for value investors?
That's the key question. Their PEG ratio, which factors in growth expectations, isn't outrageously high, suggesting the growth might justify some of the premium. For a value investor, it comes down to whether you believe their long-term earning power justifies the current price, or if you see temporary concerns, like those Q1 bookings or tariffs, creating a potential discount. Interestingly, Morningstar's analysis in mid-May suggested the stock was actually trading about 21% below their estimate of fair value.
A 21% discount according to Morningstar? That could certainly suggest an opportunity, despite the high multiples.
It could, yes. It depends on your conviction in their long-term story versus the near-term headwinds.
All right, that was a really thorough look at the business fundamentals, management, and financials. Let's shift now into the second half and explore market sentiment. What's the general feeling out there about ASML right now?
Well, looking at the analyst community as of mid-May 2025, the consensus is overwhelmingly positive, really bullish, actually. The average brokerage recommendation was a strong buy.
Strong buy. So most analysts covering it are optimistic.
Yeah, something like 80% of the 25 firms covering them had a strong buy rating, and the average 12-month price target suggested pretty decent upside, maybe around 19% from where the stock was trading then.
Okay, so Wall Street analysts are generally fans. But does the commentary reflect any of those risks we discussed?
It does. While they're optimistic about the long-term drivers, AI, EV, leadership, high NA, they do acknowledge the concerns around the Q1 booking slowdown and definitely the China trade restrictions.
And how has the actual stock price been behaving? Has it reflected that analyst optimism?
It's been a bit volatile, actually. It took a noticeable hit, down over 8% after those Q1 earnings came out, mainly on those booking and China worries. Short-term technical indicators were a bit mixed around mid-May.
So a disconnect between the long-term bullish analysts and the market's short-term reaction.
Kind of, yeah. It highlights the difference between fundamental value analysis, which most analysts focus on, and the market's sometimes jittery reaction to news flow and near-term uncertainty.
Makes sense. What about other market signals? Short interest, for example. Are lots of people betting against ASML?
Interestingly, no. The short interest was relatively low as of mid-May. The percentage of the float shorted was well under 1%, much lower than the peer average. That implies there wasn't strong bearish conviction, despite the recent news.
Okay, so not many active bears. What about the options market? What sentiment does that show?
The options data around mid-May was a bit more nuanced, maybe mixed to slightly bearish, actually. The put-call ratios for overall volume and open interest were leaning a little towards puts, suggesting maybe more hedging or some bearish bets.
So that contrasts a bit with the analysts' strong buy ratings.
It does. It could mean traders were protecting against short-term downside risk, even if they shared the positive long-term view. Or maybe just some speculative plays. Implied volatility wasn't super high, though, suggesting the market wasn't expecting massive swings right then.
Okay, so analysts bullish long-term, market showing some near-term caution, not much short interest, maybe some hedging in the options market. Got it. Now let's look at who actually owns this company, the ownership structure.
Right. ASML has around 393 million shares outstanding, and institutional ownership is very high.
Meaning big investment firms, pension funds, that sort of thing.
Exactly. Fintel data showed over 2,200 institutions holding their U.S.-listed ADRs alone. The global institutional ownership of the ordinary shares is likely even higher.
Who are some of the big names holding significant stakes?
You see major players like Infinitum Asset Management, Capital World Investors, Fisher Asset Management, Fidelity, FMR, LLC, Price T. Rowe, and of course, big index fund providers like Vanguard hold substantial positions through their international funds.
So heavily owned by the big institutions. What about insiders management and the board? Are they significant shareholders?
Well, recent data didn't show any significant insider buying or selling. While executives do get share-based compensation, detailed current ordinary shareholdings for individual board members weren't readily available in the summaries we looked at. Generally, though, significant insider ownership is seen as a positive aligning management with shareholders. The lack of recent activity here is maybe neutral.
Okay, so predominantly institutional ownership. Now let's pull it all together with a crucial step. Risk assessment. Let's do a SWOT analysis. Strengths, weaknesses, opportunities, threats.
Sounds good. Starting with strengths. That dominant market position and EUV monopoly are clearly number one. Technological leadership, the innovation pipeline with high NA, that wide, durable economic moat, strong customer relationships, robust financials, experienced management, exemplary capital allocation. It's a strong list.
Definitely. What about the flip side? Weaknesses.
Customer concentration is one reliance on a few huge clients. The systems are so complex and expensive, it can lead to lumpy revenue. They've mentioned operational challenges in the Netherlands. That negative Q1 free cash flow needs watching. And those liquidity ratios, while perhaps explainable, are lower than some peers.
Okay. Now, opportunities. Where's the upside?
Huge opportunities. The secular growth in semiconductor demand, AI, 5G, IoT, everything driving towards that trillion-dollar market. The adoption of high-end EUV is a major product cycle, expanding their installed base management services for more recurring revenue, potentially new applications for lithography, and maybe benefiting from onshoring efforts like the CHPS Act, if they can capitalize.
And finally, the threats. What keeps management up at night?
Geopolitics is huge. Tensions, export controls, especially impacting China, which was over 26% of revenue in 2024. Those new U.S. tariffs, cost impact, demand impact. That's a big question mark.
The semiconductor cycle itself is always a threat too, right? Boom and bust.
Always. Supply chain disruptions are a risk, given their specialized suppliers. Long-term technological disruption could something replace lithography. Seems unlikely soon, but it's a possibility. Talent retention is key, and intellectual property theft remains a persistent risk.
It really feels like that core strength, the EUV monopoly, is also what makes them such a focus for those geopolitical threats and export controls.
Absolutely. It's a double-edged sword.
Mhm.
And those onshoring opportunities might even be limited by their operational constraints or issues back in the Netherlands. It's a complex interplay that requires really astute management to navigate.
Okay, so with all of this in mind, the incredible technology, the strong market position, the bullish analysts, but also these very real uncertainties like tariffs and geopolitics, what's the big question we're left with? We'll get to that provocative thought right after a quick note.
Yeah, if you want to dive even deeper into the numbers, explore AI-powered analysis of stocks like ASML, definitely check out and subscribe to the Stock Analytics AI YouTube channel. You'll find a lot more tools and insights there.
And just a reminder for everyone listening, this deep dive is purely for informational purposes. It's based on the information we had available as of today, May 17th, 2025, and reflects our analysis of those sources. This is absolutely not financial advice.
That's right. Always, always do your own thorough research. Dig into the source materials yourself and consult with a qualified financial advisor before making any investment decisions. The analysis you heard today might incorporate interpretations or summaries helped by AI, but the source documents are always the definitive reference.
Okay, so here's that provocative thought for you to chew on. In a world that's increasingly, almost desperately, reliant on the absolute cutting edge of semiconductor technology that basically only ASML can provide right now, does their future success hinge more on their own continued technological brilliance and innovation?
Or does it hinge more on the geopolitical chess moves and trade decisions being made by governments thousands of miles away from their headquarters in the Netherlands? Think about that. Where does the ultimate leverage really lie in our digital age?
Thank you so much for taking this deep dive with us into the really fascinating, truly critical world of ASML.
Yeah, we sincerely hope this has given you a clearer, maybe more nuanced understanding of this pivotal company that is, without exaggeration, shaping our technological future. Hopefully we cut through some noise and give you those aha moments.
We've really only scratched the surface here today. We absolutely encourage you to explore the source materials. We've linked to them in the description for an even richer, more detailed picture.
Definitely. And think about it, what stood out most to you from our discussion? What questions did this deep dive spark for you?
And please don't forget to subscribe to the deep dive. It helps you stay informed, and you'll be the first to know when we unpack our next set of crucial sources.
And if you found this valuable, maybe share it with a friend or colleague who you think would find ASML as fascinating as hopefully you did. Thanks for listening.